Good morning, everybody. Welcome to the November 7th, 2024 ESS Finance Subcommittee meeting. We will go ahead and start with the October 10th, 2024 summary of subcommittee action minutes. Did everyone have a chance to review those? Are there any changes, additions? If not, I would take a motion for approval.
This is Geraldine. I'll make that motion.
Thanks, Geraldine. Do I have a second? This is Stacy. I'll go ahead and second. All in favor say aye. Aye.
Aye.
Amy responded in the chat pad.
Okay. Opposed, same sign. Motion carries. We'll move on to the blank, no outstanding accounts receivable update. That's awesome, guys.
That's correct. Keep going.
Yeah, so yeah, we'll just keep on going. So we'll go on to the memo. I think Phil had a memo for the ESS maintenance refunds.
Yeah, I can take that. We wanted to just report to the subcommittee that as part of our reconciliation of all of the maintenance fee payments to the local service providers, we did have some transition issues, particularly that involved movement from one service provider or different service providers over to the Fiddler system. So when we were aware that that transition was happening, we reached out to Fiddler and said, normally what we would do is make a prorated payment. So if the transition from one service provider to another happened after July 1st, we would look and see, okay, when did the transition actually happen? And then we would make arrangements with the incumbent service provider to pay them for the months that they provided service. And then we would work with the new service provider to provide them payment for the balance of the year. And that this is something that we have done with different situations over the years, and there's really nothing new or unusual about it. But the thing that happened this year is that we communicated with Fiddler and said, you haven't really started services for that county, so we think a prorated payment would be appropriate. And their initial position was, well, we just won't bill you for those counties for the entire.
And it's very small.
Hang on.
Hey, Teresa, can you mute your microphone? Or thank you. Go ahead.
I think that was Kelly's. I'm not sure, but in any event, so when we communicated with Fiddler, they basically said, well, we'll just ship it. We won't charge you for the entire year, and then we'll pick it up next year, which was not expected. So we continued on basically into last month, and we're completing the reconciliation and starting to put the budget together. And I thought, well, let's just make sure. So I communicated with the Fiddler team and said, are you really sure you want to do it this way? I told them how much we believe they would be due if we used the prorated payment. I provided them the exact amounts, and they said, no, we really meant it. So we said, okay, we accept that you do not wish to be paid while providing those services to those particular counties. And so that put us in a position where those counties had provided payment of their cost share for those maintenance services. And so we felt that it was appropriate to refund that money to them. And then while we were doing that reconciliation, we recognized that there had been a similar situation with the Dallas County transition in the prior year. And when we realized that that had been overlooked, then we decided we needed to issue a refund to them as well. Memos were sent to the affected counties explaining the reason for the refund. To the best of my knowledge, the checks to those counties have all cleared, so they've accepted that refund. We just wanted the subcommittee to be aware that this is taking place. No action is required.
Okay, great. We'll move it on to Samantha for the November summary of the October ESS payments.
Thank you, Stacy.
You bet.
I just have a couple accounts payable transactions here highlighted. All the rest of them you see every month. The 4750 was for the Sac County Recorder. They had changed bank accounts, and somewhere in the distribution that morning, the bank was not able to find the 4750. So we went ahead and funded them so they can reconcile. And if those funds do come up and they're found, they're gonna just write us a check and send it back. The $3,149.95 is from Avenue. They submitted their invoice to us a little bit later than the other maintenance providers. So we did pay that in October as well. And for the credit card detail, the $120 is for the new Canva subscription, mostly for Kristen and communications. We are expecting a little bit of a refund back on that as there was tax included. They forgot to take the tax off the bill. The $63.50 was for Hy-Vee flowers. My grandma passed away last week. So Iowa Land Records sent flowers to my family. Then Myrna needed a new monitor, so she went and got a new monitor for the $449.39.
Sam, can you magnify a little bit more, maybe?
Yeah,
Thank you.
is that better?
Yes, much better. Thank you so much.
Okay, you're welcome. I'd be happy to take any questions. Otherwise, I'd ask for your acceptance and approval of the October payment reports.
Thanks, Samantha. I'm really sorry to hear about your grandma, so.
Thanks.
Yeah, any questions for Samantha? If not, I would take a motion for approval. Amy made the motion. Do I have a second?
This is Geraldine, I'll second.
Thanks, Geraldine. All in favor, say aye. Aye.
Aye.
Amy, aye in the chat pod. Kelly, aye in the chat pod. Opposed, same sign. Motion carries. Okay, we'll move on to the November Fund 255 reimbursement invoice.
Okay, this is the reimbursement to the state auditor or state treasurer's office. The total this month came to $41,213.58. This is for the $1 fees attached on each eSub recording. This is to help regulate our payroll expenses, which are higher than that 41,000. I'd ask for your acceptance and approval of the reimbursement to the state treasurer's office.
Any questions for Samantha? This is pretty standard. Do I have a motion for approval? Amy made the motion.
Kelly
and-
admits, I think Kelly made a motion
Okay, Kelly, we'll give that to
in
you.
the chat pad.
Okay, and I will go ahead and second that motion for approval. All in favor, say aye. Aye. Amy and Kelly in the chat pod, aye. Opposed, same sign. Motion carries. Okay. Moving along to the September quarterly and year-to-date 2024 financial reports.
The Bankers Trust account had a beginning balance of $1,206,902.94, with an ending balance of $1,092,886.29. We were successfully able to reconcile the Bankers Trust account for September. Then the drawdown account, we are also able to successfully reconcile. September profit and loss. I have a few things highlighted here. The $90 for the bad payment fee. We had 3 chargebacks in September. Professional Solutions does charge us back or charge us for a chargeback fee. So we are passing that on to the customers. So that'd be the $90 here. The ILRL conference registration. We had 1 late deputy register in September, and then we also refunded Lee County. They were unable to make it with a I think it was a death in the office.
Yes.
So we did refund 2 of those. Total budgeted income for September is $140,350.76, with revolving income of $2,879,643.13, with a total income in September of $3,019,993.89. The ILR annual conference, these are just the expenses. I believe it was for food and the reservation of the office space that we rented. And the promotional expenses would be for the ILR swag. The local maintenance expenses, we would have a service provider submit an invoice to us in September for $16,799.75, with total budgeted expenses of $128,986.47. And then you'll see the $71,088.50. This was for the Susie bill that was unexpected for the last several years for extra licenses that we're using. And this came out of the reserve. With total revolving expenses of $2,888,714.92. Total expenses came to $3,115,781.05, with total net income of negative $95,787.16. We did prepare a budgeted only profit and loss for September. Total budgeted income of $140,350.76, with total budgeted expenses of $128,986.47, with total net income of $11,364.29. For the third quarter, 2024, we highlighted the conference registration. So this would be the majority of the registrations. I believe we did have some in June as well. So we'll cover that when we go to the year to date. But for the third quarter, we had $2,500 worth of conference registration. Total budgeted income of $433,282. With revolving income of $9,109,642.72, with total income of $9,542,924.72. We did pay our insurance, which is an annual fee in the third quarter for $37,205. And the POS transaction fees I have highlighted here, as this did come in a little over what we were expecting. We have worked out a solution with Professional Solutions to get this lowered back down to what we were paying with Bank Card USA. The ILR annual conference expenses here for $4,310.38. The swag again is highlighted. The negative $2,010.77 is the light edge bills. I believe we talked about this last month where we have this unexpected almost $4,000 credit in September that we're still trying to work out with Light Edge. And then also the credits did come in this quarter for the overbilling from the second quarter. Local maintenance expenses of $302,578.75 with total budgeted expenses of $644,398.23. Again, the Susie bill here. The depreciation for the third quarter was $80,973.48 with total revolving expenses of $9,128,138.67 with total expenses coming to $9,932,473.88 with a total net income of negative $389,549.16. The budgeted third quarter total budgeted income was $433,282 with total budgeted expenses of $644,398.23 with total net income of negative $211,116.23. For the year to date, we do have those maintenance fee expenses in here. So this would be where the income comes in. So we paid the service providers in the third quarter, but the income when we billed the counties for their share of the maintenance fees is actually in the second quarter. So we do have $184,241.82 with local maintenance fees, with budgeted income of $1,385,797.95, with revolving income of $25,105,649.34, with total income of $26,491,447.29. The local maintenance expense for the $306,660.87 with total budgeted expenses of $1,315,418.98. Planned reserve expenses came to $118,342.47. The depreciation for the year to date was $250,513.15 with total revolving expenses of $25,114,560.08 with total expenses coming to $26,798,834.68. In the second quarter, we also had the retirement of the equipment, the storage equipment, with a net income of negative $353,309.35. The budgeted profit and loss, so this wouldn't include the reserve expenses nor the depreciation. Budgeted income came to $1,385,797.95 with total budgeted expenses of $1,315,418.98 with a total net income of $70,378.97. 378 dollars 97 cents. 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 378 dollars 97 cents Balance sheet as of September 30th. We have $1,100,483.90 sitting in the BT account. This isn't probably the actual amount, as we are accrual-based accounting. Total assets and total liabilities and equity equal $2,576,350.05. I did print out journal entries for October. We haven't done this for a while. We didn't have any in September, and I think we only had a penny in August, so I haven't printed them for a while. But just to show you October's, there was a couple double drawdown entries made by me in mistake, so I had to reverse those. So the $12,892 is just a reverse of the double entered into the system. Same with the $8,880. And then the 3 cents down here is for the overpayment from the state treasurer's office. They gave us 3 extra cents from what we had billed, so I just took care of that and got it off the books. I was thinking maybe they'd lower the next payment by 3 cents, but they have not. And then the 1 cent rounding error for the POS payments. The credit card.
Samantha, I'm going to interrupt you here for just a minute
Okay.
because there was a lot to digest in the year-to-date and the annual and the quarterly report. And I think it's worth commenting that, you know, I'm glad we do distinguish and have a budget report as well as a total financial report, because there are things that we do in the larger financial reports that I'm just gonna say skew how things look. And the biggest issue that affects the 3/4 report or the year-to-date report is that um, depreciation is so high. So a few years ago, the auditor said, you need to start calculating your assets. So you spend money on software, they said you can't treat it as an expense when it occurs. And so, okay, you have to treat it as an asset, and then you apply a depreciation schedule to it, to move it from the asset to the expense column. That's the way it works. Well, if you are in a situation where um, you have a kind of a normal flow where you're sort of always creating new assets and then depreciating the assets you already have, it doesn't really skew the financial report that much because it's fairly balanced. But we went through a period of significant investment in software development, particularly using outside consulting assistance to create the new search application and the new admin application. Um, and so we had a period of time when we really built up a lot of assets. And now we're in a period where we're essentially, for the last year and a half, 2 years, we really have been in maintenance mode, okay? And have not had the capacity to do a lot of new software development. And so as a consequence of that, everything that shows up on the balance sheet really is in the form of the accumulated depreciation. And so that has to work its way through the system. But uh, and a less transparent process might cause somebody to conclude that, oh my gosh, what the heck is going on? Now, I'm not going to say that we haven't had a few things happen that have further exacerbated the negative number. One of them is the unexpected $71,000 expense that we just had to do in order to get square with our operating system software licensor. That was an unexpected and not insignificant amount. And so when you take just those two things together, that's how you end up with a fairly sizable negative net income in terms of looking at both the budget as well as the revolving account. So I'm happy to have the scrutiny of or answer any question that you have, but I'm just anticipating that something that could come up in somebody's mind, and I'm giving the answer right out of the gate. That is why it is that way. We don't like to see that. We prefer to have a more balanced situation. Quite honestly, I prefer to expense software development instead of treating it as an asset. Because of something like this. We're not going to be in a situation where we just have this nice steady inflow of asset development and then depreciation to go along with it. The nature of where we are at is that when we make an investment, it's a surge. Uh, and then you deal with the depreciation after that. So you may have other questions about the main financial report, but for me, that's the one that really sticks out like a sore thumb, and I wanted to comment on it further before we got too deep into the rest of the agenda. I'll be quiet.
I appreciate that, Phil. Does anybody have any questions? I kind of look at it as like, I know we're not in the farming business, but you buy a brand new combine and then it's an asset and then you have depreciation to offset it. Well, then it's depreciated out and then a farmer will buy a new piece of equipment. So I look at it like that. Maybe that's probably a simple way to look at it, but it makes sense because we're not buying more assets and not putting a lot of money into development right now because we're kind of in a spot where we really can't financially so I think that helps me to remember the depreciation. So anybody else have any questions or comments? I mean, we appreciate it is a lot to digest, but it makes sense monthly, quarterly, year to date. So anyone? Okay, keep on. Do you need to keep on going, Samantha? We got a little
Yeah.
bit left, don't we?
Yeah, yep.
Okay.
The September credit card statement came with a new balance of $3,260,039. We were successfully able to reconcile to that statement. Fund 255 for September had a beginning balance of $164,009.35 with an ending balance of $205,222.93. With total receipts of $41,213.58. This does match what we are sending back to the state treasurer's office. Profit and loss for Fund 255. And the balance sheet for Fund 255. I'd be happy to ask or answer any questions. Otherwise, I'd ask for your acceptance of an approval of the September quarterly and year-to-date financial reports.
Any questions for Samantha? If not, I will go ahead and make a motion for approval of the September, the quarterly, and the year-to-date 2024 financial reports. Do I have a second?
This is Gerald, I'll second.
Thanks, Geraldine. All in favor, say aye.
Aye.
Aye. Kelly and Amy in the chat pod, aye. Opposed, same sign. Motion carries. Okay, we'll move forward. Thank you, Samantha, very much. Move forward with the metrics first. Do you want to do that first, Phil?
Yes, just to provide an overview, the period of October actually was a very positive one from an e-submission. I'm sure you may have noticed it locally as well, but if you look at the chart, you know, the income from each submission almost matched 2021, which shows a very positive year. I don't have a specific explanation for that, but you know what we have seen in August, September, and um, October are some fairly positive numbers in each submission. I'm conservative enough to say I don't want to call this a big trend, that the real estate economy is recovered and on we go. I don't think that is true. But I am grateful and thankful for a fairly positive month. And from what Lisa has and Corey have shared, and Samantha have shared with me, November is off to a very good start as well. So this is good news. It's particularly good news from the standpoint of a kind of an end of year. You know, instead of squeaking by, we're actually in a position to make some decisions that um, help address some issues that have been lingering, and I think that will come out in the discussion of the budget amendment for this year, as well as for plans for 2025. So with that, I'm going to ask Samantha to stop sharing her document, and I'm going to move into the the budget discussion. Uh, for subcommittee members, I want to encourage you to maybe refer to the memo that is in your packet to help guide you and give you some written documentation about what I'm going to be describing in the budget. So let me start sharing my document here, and we can proceed.
Great, and that's on page 151, if you guys have your packet
Right.
up.
If you have your packet, you're right. That is 151.
Okay.
So we'll start with the revenue side of the equation. So just as a reminder, sort of how do we do things? And I'm going to reduce this just a little bit. And if anybody needs me to expand anything, please just say so. So in order to manage resources and make sure that our financial reporting is correct and our budget is in alignment, whenever we do a budget amendment, we basically do a conversion from budget to actual. Okay. And anything that's a big deviation from what we budgeted, we try to highlight that. But generally speaking, the way it works is things following their normal course, there's going to be a deviation in income or expense because things just don't always work out in round numbers. So the items that are in the burnt orange color, I would describe as converting everything that we've done through the course of the year from budget to actual. And so what's represented there are the actual numbers for both revenue and expenses. It's burnt orange because we've reconciled it. We've reconciled the account. We've reported it on it to you, and it's I would consider a solid set of numbers as you can get. Similarly, the month of September, we've just been talking about that. We just presented those financial reports to you. Those have been reconciled, and now we've reported to you what they were, and those numbers are represented in the September column, and they are color-coded green. Looking a little bit ahead to financial reports that we will share with you at the next month, October, I believe we have internally reconciled those numbers, but we haven't completed the financial reports to you. And so we want to call them out and just make sure everybody understands that we're not 100% done with the reconciliation and reporting of that. But most of the numbers in the October column, which is highlighted in blue, represent actual numbers for the period. So we're a weekend in November. We've had a chance to go through and do the financial reports. Samantha has imported most of the QuickBooks transactions, and we feel that this is a fairly good number, but it may not be the absolute final number. But good enough for us to represent to you, okay, this is something that we feel confident about. When we get into November and December, those columns are less certain. They haven't happened yet in most cases. We're just beginning to import and accumulate information about income. And so you have to characterize those as estimates. There are some things that we can estimate very well, and then there are others that, we are going to just say we're speculating as to what that might be. Then the other distinguishing feature in November and December columns is that if the background is white, that should be interpreted to mean that we previously discussed it, we've approved a budget amendment in prior months, and if those numbers have not changed, that is, if we're holding true to the original estimation that we did, then it would have a white background. On the other hand, if you go deeper into it, particularly in the expenditure side of the equation, we have certain knowledge. We're not guessing what revenue is going to be. We have better information about any changes that might occur with regard to expenses. One of the areas of expenses that we have knowledge about is that in October, the new benefit structure went into effect. And that means that when we see a payroll report, we can see, okay, this is how much benefits cost, along with the compensation that we were providing to team members. And because this is new information that is different from prior periods, we want to call it out and say, we have better information now and we have revised the estimates. So any of the line items that relate to human resources, specifically positions on the ESS payroll, you're likely to see that presented in a magenta color because we have new information. In some cases, we literally are saying we're going to adjust the estimate based on our experience, and so we want that to be more accurate than just leaving it the way it was. So that's how you read this chart or how you read this table, and I'm going to go through the revenue and expenses now. So most of the changes in terms of policy or adjustments are going to be in that November, December column. We really aren't making many changes there, but we are documenting the benefit of better e-submission activity and more income during the most recent 3-year period. So when we adopted an amendment in the August meeting, we said we project that income is going to be $1,744,000 and change. And what really happened during this period up to this point is we actually have seen an increase in income. And so based on that increase, we now project that income will be $1,765,000. That's a $21,000 and change increase in projected income. I want to note that on the revenue estimates, I didn't change anything. I'm sticking with the estimates that we made in prior budget amendment, and I would generally characterize the estimate as a fairly conservative estimate. At least I hope it is, and that should put us in a position where we potentially could see some further increase in income before the end of the year compared to the projection. Please stop me if you need me to. So then, moving into the expense side of the equation, you have certain items like the bookkeeping, that's Samantha's position, the human resource costs, the position for Kristen, the communications coordinator, moving on down to the account manager and the customer service coordinator positions, and then the policy coordinator position, the members of the development team. All of those things represent the ability to look into the payroll reports and to see what the impact of the benefit changes are. And now we can make a better estimate about what those expenses will be. And then if you look at column T, to the far right, you can see whether or not we are above or below the projections that we made in the August budget. And then again, column R represents the what the total amount is for the budget amendment for the calendar year 2024. A few other things deserve to be called out. You know, we have seen or will see increases in the cost of having face-to-face meetings with ESS. So we bumped that up a little bit. We made an adjustment in miscellaneous expenses, just because what we did at the beginning of the year is we put $200 in December and kind of said that's our budget, and then as we go through the year, if we spend any of it, then I adjust that $200 to a lower number, and you can see that the change is actually less. So it's just a way to manage that budget expense. Seminars and workshops. Throughout the year, I have allocated resources so that we have travel expense money in the event that it is feasible for any member of our team to attend a district meeting. And so I've retained that in the budget. And again, we may or may not use that. I understand there's a district meeting that Lisa and Census might be attending here coming up in the near future, so we kept that in the budget. Conferences and meetings. We're actually looking ahead to next year in this one. We have an opportunity to sort of prepay registration for the Winter Symposium of PRIA. I can discuss more about that when we get to the 2025 budget, but we have resources that will help us in 2025 if we can go ahead and pay that expense. Software is fairly normal. We've added some inflation to it. And then the November amount includes the renewal of our SurveyMonkey license. So I've already talked about the actual cost adjustments for the staff. I just want to say, just factually, there's no real staff increases here. This is really just a reflection of changes in benefits. So I share that with you. Then I can report that, we have restarted and have been operating in a more normal posture with CSI, our redaction service provider. The concerns about security have been resolved. We are actually in the process right now of rechecking everything that we redacted through our alternative process just to make sure that we didn't miss anything. And I have to give credit to CSI. They're helping us recheck all of that at no expense to us. So what the amount in October represents is that's when we restarted services, and now we're just projecting what we spend for forward file redaction services going on through the year. As Samantha mentioned earlier in the expense side, we needed to get Myrna a new monitor, and there was a small piece of equipment that we needed to get for Nancy's computer as well. So I have added that to the budget. We originally had budgeted $500. I added $100 to that budget for those two items. Okay, then we get down to the bank service charges. We are still projecting a $650 amount, or I guess I've increased that just a little bit for a regular bank service fee. And then our online transaction fee and our point of sale transaction fee, I've adjusted those estimates just a little bit. The online credit card charges are higher if you look at the far right-hand column, higher than we originally projected. And we're having some discussions with Professional Solutions about what we can do to reduce that amount. Really not a lot of change in the Vericheck or the transaction fees, but trying to look at what our experience has been and then adjust accordingly. So for the total year as adjusted with this proposed amendment, expenses would be $1,693,000 and change. This is overall a $35,000 reduction in expenses, and combined the additional revenue and the expense reduction leaves us with projected almost $72,000 in net income in the budget. I'm going to pause a moment, take a sip of my coffee, ask if you have any questions about the budget recommendation for the amendment for calendar year 2024.
Anyone? As always, you do a great job explaining it, Bill. So,
I would direct your attention to the first paragraph of page 2 of the budget memo, just to make sure, because I have looked into the possibility of the allocation of some resources for staff compensation adjustments, or at least temporary adjustments. So I want to make sure that you're aware that that has been incorporated here. Okay, I'm going to switch gears now and move to the 2025 budget. So there's not much highlighted here. The things that are highlighted I will call out, but it's not highlighted because the year hasn't happened yet. No conversion of budget to actual. Everything is a projection about what will happen this year. But for reference, what I would say is if you looked at the column S, what you see is that is basically the amended budget for 2024 that we just looked at. And what it represents is a comparison so that you can see, as we put the 2025 budget together, okay, how does that number compare to the final amended budget for 2024? And so you can see that, for example, I have proposed that we have a $7,000 estimated income for the ILR conference. Now, there's been very little planning done for that yet, but we basically have a goal of breaking even for the ILO conference in terms of registration fees and then expenses. So we started out last year at 7,000. We ended up with a smaller number because of lower attendance. We manage our expenses. So you'll see when we get to expenditures that there's a matching $7,000 expense. And this is just because we're estimating. Our actual expenses this year were less than that, and our revenue was less. That's why there's a difference there. But in reality, it's an estimate that that balances out. We earned a whopping $950 from Lynn County's payment service for their registration renewal, and I'm basically estimating about the same amount of revenue this year. Although I am told by Lynn County that they will be adding 2 new online services this coming year where they will be using the same payment system. So it might go up a little bit, but not a huge amount. And it's been a great experiment for us to work with Lynn County. So we really appreciate the opportunity to work with them. On the point of sale revenue, we project that we're going to end this year with $110,000 and change in income from the point of sale system. The estimate suggests here that we project $108,000 in income from that this year. For the e-submission service fee, as things look right now, it looks like we'll have about $973,362 in income from e-submission, from the $3 e-submission fee. We're projecting that to be at $968,500. So I'm hopeful that this is wrong, but again, being very conservative or trying to be somewhat conservative on this, we're actually projecting a little bit less in income for this year. So the next grouping is related to MOU services. You may have some questions about this, but the way things work right now under the current MOU, the ESS bills the association for a portion of those MOU expenses. And I guess the best way for me to describe it is after consultation with the ICRA leadership, we've determined that we're not going to be able to continue the MOU as we have it today for the second half of this year, but we are going to be continuing it through the first half of this calendar year. So the figures in columns F through L generally mirror, that is January through July, generally mirror what our current experience is. But because it would be discontinued at least in its current form, those figures have been zeroed out. So really only about a half a year of income associated with the MOU. And then from the association's expense or perspective, about a half a year of expenses are incorporated into the budget. Fund 255, we project that or projected that we'll end the year with total income from the Fund 255 reimbursement in the amount of $475,000 and change, and we're projecting income for next year from that source to be $472,500. I just want to maybe this would be the right time to just interject a reminder that this budget has been built on current law. There is no speculation in this budget about additional income from a fee policy change. Basically, the law is the law until it changes, and that's the basis for doing it. And given what the current law is, and given the current state of the overall real estate market, we're basically calling for flat recording activity again in 2025. That's what the projection is. The next item I will call out is the cost sharing credit. So we are projecting that in calendar year 2025, or you might say fiscal year 2026, the maintenance fee, total maintenance fee expenses for all of the local service provider works would be in the neighborhood of $323,000. Last year, when we put the original budget together for 2024, we said, hey, it's a tight budget. We had to make some adjustments. And we started out with a cost sharing credit of $115,000, which is less than what had been previously allocated, just because of budget constraints. We're doing something similar this year, and that is starting out with a $120,000 allocation for the cost sharing credit. If things go well, before we get to March or before we get to May, usually in the period when those invoices are issued for maintenance, we may be able to adjust that upward. It just depends on what the income looks like. And then, again, not trying to speculate what may or may not happen, but just as a reminder, one of the ideas behind the fee policy change is that if we make that change and ESS and IOR get the recommended allocation from the new fee, then the plan would still be to convert that and take over 100% of the maintenance expenses. But again, we're building this budget on current law, not speculating about what future law may be. So overall, projected income for the project was for 2024, 1,781,000 and change, and we're looking at 1,785,000 and change, a modest $4,000 increase. So from a revenue perspective, we are not anticipating a big rebound in the real estate economy in 2025. We just don't have enough information or knowledge to cause us to be able to speculate like that. On the other hand, we don't want to be overly pessimistic either. It seems to be a reasonable assumption to say, let's basically use the income level we received in 2024, particularly now that it's almost over, that's a fairly reasonable basis for a projection, and that's what we have done. So that's the revenue side of the equation. Any questions about projected revenue for 2025? Okay, so I'm going to move on. I know that we're approaching our usual adjournment time. This will take a little bit longer than that, but not too much longer. So I'm primarily going to be concentrating on column T, okay, which is the change column, and maybe calling out a few things that that merit some explanation. So the first thing I'm going to call out is in the annual audits, we've communicated with Denman. They are projecting that the audit will come out at about a $10,000 expense this year, and that's reflected in the budget. I have also asked their opinion about what should happen or what will happen with the 990 return for the Iowa County Recorders Association. We're hoping that they can move to a simpler version of that, and then as an association, take that expense over. But during this period when we're transitioning, continuing that transition, the way the 990 return works is you have to kind of blend 3 years together, and that adds complexity to the preparation of the return. And so Denman's actually informed me that it's going to be a little bit over $2,000 this year to prepare that. I did not have time to change it here, but I would just declare my intention to change the $2,000 figure to 2,050 or whatever it is that they're gonna estimate for me before I get to the ESS committee next week. So there is an increase in our audit fee and a sustained expense for the 990 return, at least until next year. Bookkeeping, I think the main change in the human resource expense for that really is related to benefit costs. There really hasn't been no salary change. Samantha was hired in April. We're basing everything on projected as actual expenses here, and compensation adjustment issues will have to be discussed at a later time. But this increase is primarily associated with benefits. Government relations, we're actually seeing a decline in what we are paying Bob and Nick Lanning for their services this coming year. The reason for that is primarily because we made a decision when we modified their agreement that we would pay them more in 2024 because we expected the money to be in the budget, and we expected the budget perhaps to be tighter in 2025. So their engagement agreement for 2025 is actually less than what we agreed to in 2024. So that's why there is a decline there. They're not reducing their services. We just manage the numbers so that they would work out. Let's see. The reason that the project manager expenses are higher is because earlier in this year, we didn't bill as much as we originally projected. So we actually billed less than what our contract allowed for. And we're letting that stand through the remainder of the fiscal year in 2024. And so all we're doing in 2025 is same contract amount, but to pay the full amount, not a discounted amount. I don't know why we did it that way, but we did. So, but it's not an actual increase. Insurance is expected to increase by about 10% in the coming year, and this accounts for our basic liability insurance, but also our cybercrime and our errors and omissions insurance as well. So that is accounted for. As I noted in the earlier discussion, I'm bumping up the amount budgeted for ESS meetings just because travel reimbursement expenses are higher than they used to be, but nothing unexpected. I anticipate, generally speaking, that the whole area of office operations is going to be fairly stable. We're actually seeing a decline in our overall office tech support expense, and that primarily is because we made an adjustment in mid-year last year. So when you compare it to 2024, our expenses were higher. And now that we have a new service provider, we're carrying that savings through the entire year and benefiting from that. So overall, office operations are projected to be about $2,000 less than the prior year. Okay, that brings us to some of our staff activities. I would say the same thing about the cost for the communications position. And that I said earlier, and that is there are benefit costs. And the other thing that I would say, particularly with regard to Kristen, is that you may recall that mid-year we adjusted the budget so that her hours should be increased. And so now we're carrying those hour increases through the entire year. I have heard some people suggest that maybe we need to do that even more. And what I can share with you is that we're working with Kristen in a structure that she is comfortable with. And that's just all we're doing is continuing the status quo. And if you have more specific questions about that, you can ask me offline, but we're appropriately handling the amount of hours that she is allocated on a monthly basis. So then with regard to the education and outreach budget, just a few highlights. I've already mentioned that we increased the expected revenue from 4,500 or whatever up to $7,000, and that's just again a balance between projected revenue. Whatever we do with that, it's going to be break even. So it's not really an increased budget. It's intended to be a self-sustaining activity. There, um, as I mentioned, under seminars and workshops, I have traditionally tried to budget money so that the travel costs that can be reimbursed for any staff member who attends a district meeting. I want to continue to support that. It doesn't always happen, but you need to put it in the budget. So in my mind, this is not really a significant increase, but it does appear to be an increase when you look at it compared to the final version of the 2024 budget. But I don't consider this to be an increase. Memberships, memberships is a an area where we used to belong to more things and we cut some things out. And so really the only two memberships that we have right now are the Iowa Mortgage Association associate membership and a membership to PRIA. We'd like to do more. We used to belong to the Community Bankers of Iowa. We're not able to do that right now. And basically, we're continuing forward. One thing that I neglected to talk about in regard to the 2024 budget is MISMO. MISMO is the Mortgage Industry Standards Maintenance Organization. And they really are the standard setting body for the real estate industry as far as data is concerned. PRIA used to have that role quite a long time ago. That's not anything that PRIA does. And in terms of the future of working with the banking and the mortgage industry, MISMO is the place to be. In the previous cycle, we took advantage of a 2-year membership with a discount, and that membership is coming to an end. And I think the spreadsheet I'm showing you is actually from 2024, was actually a prior version. And the main difference is that in 2024, I am recommending allocating $4,000 to join PRIA again for 2025. It's not the discount of the 2-year membership, and I acknowledge that the membership is not cheap. It's not. But if you want to play with the big boys, you really need to.
Phil, it's Lisa. I'm going to jump in.
Yes.
The 4,000 is for MISMO, not PRIA.
Yeah.
You said PRIA.
I'm sorry. The
Okay.
4,000 is for MISMO, not PRIA. The PRIA money is in the budget, but I'm incorporating it into the 2024 budget, not this budget. Thank you for that clarification, Lisa. We can go back over this. That's just a highlight of that change.
And Phil, you had it in our memo as well.
Yes. Okay.
You clearly covered it in our memo and it was highlighted in red.
Thanks.
The amendment, so.
Okay. Very good.
I think we're good. I mean, anyone else have any questions about that right now while we're talking about it?
Thank you. Feel free to stop me anytime. Apologize for that.
It's okay.
Conferences and meetings, I mentioned earlier that there were some 2024 expenses for pre-registration. This particular expense in March would be for actual attendance at the conference and would include the basically hotel and meal expenses associated with attending that. Not a lot of change in software, and I don't have anything in the budget for promotional items this year, in 2025. If we have a good year, maybe we can do that, but it's not in the budget at this time. The account manager position, I had a question about this, and particularly about Lisa's position. And I can't go into a lot of detail here, but there's been no adverse change in Lisa's position here, but there have been some benefit election choices that have affected this number. So if you're wondering, why is the amount for this year less than 2024, it all has to do with that. So don't read anything into that, but it does, the change does provide a little bit of savings to the budget. The customer service coordinator position, while it's not a benefit change, it does represent a bit of adjustment in hours for Corey's position, but not a significant change. And then I've already described the changes that are pending for the policy coordinator position, and the changes in the development team costs are fairly modest. The change that is relevant for Nancy is a proposed increase in hours for the coming year. You may recall that she stepped away and has been working part-time primarily for family issues. She's indicated that she's ready to start working more, and I have incorporated more hours in the budget for that position. A developer's position is more expensive. It's not a trivial expense, but we definitely want to have her back, and I have incorporated that into the budget. Two things that I should have also mentioned in the 2024 budget amendment, and I believe it is addressed in your memo, is that as a cost-saving measure, we made a decision to pay for certain software license renewal expenses using reserve funds. We did that last year. And in the memo, because we have additional resources, I'm recommending that we pay for those out of the regular budget. So in 2024, even though we've already paid for them out of reserve, I am recommending that we make a journal entry to take the funds back out of the regular budget because we have net income, right? We have some positive net end of year income. For 2025, I'm just recommending that we pay for those two important expenses out of the budget. We can't indefinitely pay for ongoing expenses out of the reserve fund. We generally shouldn't do that. And so even though the budget is tight, and we might choose to use those resources in other ways if we could, I think it's a better practice to say, let's bite the bullet, get it back into the budget, and then if we can improve revenue or if the economy improves, then we can do some other things. And so these two highlighted items here represent that recommendation. Not a lot of other changes in the software license and maintenance expenses. Really not, I haven't put anything back in for developer equipment. The local and maintenance expenses, as I mentioned before, are going to be increasing by about $13,000. And the bank account analysis fee is something that uh, is something that is not a big change, and we do have a recommendation that will follow this relating to the establishment of a sweep account that will help us mitigate these online payment fees. So all told, um, we're looking at total expenses of $1,784,000 and a net budgeted income of about $794, which is not unusual. We've done that in prior years. And generally what happens is we try and manage the budget throughout the year on both the revenue and expense side to see if we can bump that number up. And generally we've had some success doing that, but I can't guarantee that, but that's generally what we try to do. So with that, I would be glad to stop and answer any questions that you have.
Thank you, Phil, for all of that. So we have, does anyone have any questions? So we have really two big motions to do. We have to make a motion for the amendment, which we covered first, which you can refer to the memo from page 151. So we'll do that, and then we will also need a motion to approve the 2025 calendar year budget. So if you guys have any questions, now would be a great time to ask.
One thing I'm sorry,
It's okay.
I had the wrong spreadsheet showing. It was basically right, but it was missing a couple of pieces. The first one was, if you can see this, I do have the $4,000 membership expense.
Phil,
in
you
the
don't have
budget.
anything, you're not sharing anything.
Oh, okay, sorry. How about now?
Yeah.
Looks good.
Yeah.
Okay.
Yep.
So I apologize. I just had an earlier version of the spreadsheet selected, and then just to match up, when you total everything up, it ends up being net income of $51,000, which should match your memo now. So I apologize for that oversight.
Okay.
This is Natalie. I do have a question. In regard to the staff compensation. Is that okay to discuss?
Can you say that again, Natalie?
In regards to the staff compensation? proposal?
Yes, sure. Go
Okay,
ahead.
and am I missing it? Is that proposed in the amendment?
No, it is not. So
Okay,
if you look at the memo, and at the very, very top of the memo, it says total gross expenditures are, the amount would be different. So instead of being a net income of, sorry.
Okay.
My finger just went a little crazy there. So in the actual budget amendment that you're looking at, the net income would be 51,174 and change. If the ESS committee approves of the bonuses at the end of the calendar year, the expense of that would be $11,500. I think this is covered in that separate memo I sent you.
Mhm.
And so you'd have to deduct that. So instead of 51,174, it would be 39,674 as the net income. Okay. So the way I would present this to you is that if the finance subcommittee supports that idea, then the individual staff memo or the staff allocations up here would be adjusted by that amount for that individual, totaling $11,500. And the total net income would be reduced to 39,674. Now, it's not the job of the finance subcommittee to approve or not approve of the bonuses. But I'm informing you as the finance subcommittee, if it was approved, that would be the impact on the budget. So when we present this to the ESS committee, I'm going to say, if you approve of the compensation adjustments, that will affect the budget by this much. But you're not being asked, because it's just out of your purview, to approve those bonuses. I'm informing you this is what the impact on the budget would be. So I'm comfortable having you approve the budget amendment as presented with that knowledge. Or if you directed me to, you could approve the budget amendment, instructing me to also make the adjustment for the bonuses. I hope that makes sense.
Oh, it makes sense. I didn't read the memo, I guess, as clear as I thought. I just.
Yeah. Yeah.
And
I did not want to present a budget to you, presuming that that would be approved, because I just don't know the answer to that. But
So if they would approve that, then would we have to come back and have another amended budget?
no, because technically the ESS committee also approves the budget. So we would amend the budget, adjust the budget amendment at next week's meeting if they approve it. I would not have to bring it back to you. But if you, as a subcommittee, wish to make a recommendation for me to pass on, then I can do that.
Yeah.
But that's up to you.
Great questions, guys. What else do you have questions about? And I think really having the memo, so you know exactly what the amendment, this current year amendment, without any kind of compensation change. So you know what we're voting on. I'd like to go ahead and make a motion for the budget amendment for the current 2024 year, if everyone's comfortable, if you don't have questions about the amendment. Hearing no one talking at all, I'll go ahead and make that motion. And do I have a second?
This is Geraldine, I'll second.
Thank you, Geraldine. So it's been moved and seconded to approve the calendar year 2024 budget amendment. All in favor, say aye.
Aye.
Aye. Amy and Kelly, yes, great. And opposed, same sign. So that motion carries. While we're still talking about 2024 current year, I'd like to address the compensation proposal that was from November 7th, the memo from Phil. Does anyone want to give their opinion currently? support, questions? Anyone in the chat?
My personal opinion is that we've got good people. We need to keep good people. It's always nice to be compensated for what you do and show appreciation for what you do. And if it's in the budget that we are able to do that, to give them some compensation at the end of the year, I'm okay with that.
Thanks, Geraldine. I would echo that. You know, they haven't had any kind of compensation adjustment for 2 years. And like Geraldine said, the budget allows for it and we need to keep good people. So hopefully next year the sun will come up and we'll have more revenue to make more adjustments, but I think it's very warranted. So I know we can't make a motion, but does anyone else want to add comments or? I don't want to speak for everyone, so. Kelly, Amy, do you want to make any kind of comment about compensation at the year end? Okay, so, oh, Kelly said our board gave us nothing this year, and I reminded them in order to keep good people, you need to give them something, right? And I think our budget allows it this current year. So would you all be okay if we, in the minutes that we give our support for this compensation at year end for the 5 positions from the memo?
This is Geraldine and I would.
Okay. How about Kelly and Amy? Kelly agrees. Okay, I agree 100% as well. So, okay, great. I think we have full support now, Bill, for
Thank you.
that.
Thank you.
Yep. And then let's go ahead and move on to the 2025 calendar year budget approval. First of all, are there any other questions, clarification for Phil and the team? If not, I would take a motion for the calendar year 2024 or 2025 budget approval. I'll go ahead and make that motion. Do I have a second? Kelly seconded. Amy, sorry, Kelly beat you out of that. All in favor, say aye.
Aye.
Aye. Yeah, Amy. Opposed, same sign. Okay, motion carries. Now let's move on to the Bankers Trust Sweep account. We'll go back to Phil, and there was also information in our packet.
Actually, I want to ask Samantha to share the packet again, and Samantha's done some research on this, and would ask her to share that with you. But I'll make an introductory comment, and that is that back in May, there were comments that we received that suggested, hey, we should be earning interest on the income or the money that we have in the operating account. And I did review the issue, and then following what Samantha has on screen and in your packet is a copy of the memo that I returned to the ESS committee and to you and other interested parties that, from my perspective, cash flow is king, okay? Because we want to be in a position to make sure that we're managing resources and distributing monies to the counties on a timely basis. That is the number one priority. And in any given week, depending on the flow of ACH transactions, we might be required to distribute between $700 and $1 million. Well, we've got a little bit over $1 million in the account, and you know, it just is not easy to allocate um, funds into a fixed interest-bearing investment of any kind, a CD or otherwise. So we did have discussion. We know that there are other investment alternatives available to local governments, but not everybody has the same cash flow requirements that we do. And so we approach Bankers Trust to say, you know, what alternatives might we have with you that might be helpful to us. And so the main alternative that came to the top of that discussion was establishing a sweep account. So with that, I would defer to Samantha to share some of the information that she's gathered.
Okay. So the current percentage of return for a money market account is 1.85%. Currently, the cash saving credit that we're receiving is only 0.75%. So it's a 1.1% extra, or it's an interest rate higher, which doesn't seem like a lot, but it is, and it's calculated daily. So the break-even point is $1 million. So if we only have $1 million in the account at all times, fees compared to the interest income would pretty much be zero. So over the last, I believe it was 456 days, the account has only dropped below that $1 million cutoff only 13 times, only 13 days. So if we can keep it above that $1 million cutoff, we will be making money. So I just ran, just like as an estimate. So over the last about year and a half or so, our average amount in the BT account has been $1.1 million. So I just ran the numbers off that. And these fees could fluctuate a little bit. I think I actually estimated them a little higher than what they normally would be. But just to give you a rough estimate, with the earnings credit that we have right now at 0.75%, we still owe monthly fees of approximately $300 to $700 a month. With the money market account, with the sweep attached to it, we would be paying those fees from that interest income and still receiving income. So there's an opportunity cost here of about $900 to $1,000 a month.
And to make a long story short, we would recommend and request your authorization to initiate the sweep account.
Any additional questions? Is that fee, I see that it's like the 1130 plus 50 plus 10. Is that kind of locked in?
Y-
Go ahead.
So the 1130 is just an estimated fees per month. It kind of just depends, Stacy, on the income we're receiving in. The $50 is actually the sweep account fee, and then the $10 is the money market fee. So this 50 and the 10 are locked in. The 11,000 or 1130 is actually could fluctuate depending on what time of year it is and how much money we're taking in and sending out.
Gotcha. And maybe it was, yeah, okay. I just had that question because you know how they like to change fees all the time, and then it's like, whoa, what was that about? So I wondered if those were somewhat locked in, or, do we have to sign this, is it just a matter of just signing an agreement that this is what we want to, this is the account we want to move it to? I mean, this is the changes we want to make.
Yes.
Gotcha.
This is Natalie, sorry, on the fee as well. I assume like every time it sweeps, there's a charge.
So actually the $50 is the monthly sweep account fee and the $10 is the monthly money market fee.
Okay, so there's not a charge like per transaction.
Nope.
Okay.
That's great. Oh, well, I'll just rip the Band-Aid off and say I will make a motion to do this. I think this is great to, I'm not wording it correctly. The Bankers Trust sweep account approval. I'll make that motion.
This is Geraldine, I'll second. Oh, I see Amy seconded.
Oh, we'll go ahead and go with Amy. Amy said second. I appreciate you looking into this. Since this was discussed by others prior, and Lisa Kent, thank you, Sam, for all your research on this, and thanks Renee for suggesting that we look into it back in May. So yeah, I have a motion and a second. All in favor, say aye.
Aye.
Aye. Kelly and Amy in the chat side, aye. All opposed, same sign. Motion carries. Thank you guys very much for all of that. So we'll move on to the subcommittee terms of office. That was, let me see, on one of the pages. My pages are all mixed up now, Phil. This one.
Right.
you
Samantha
talk
can
about?
advance forward. I think that's in the
Yes.
packet. Can you advance, Samantha?
Just a little, yeah.
Is it this one?
Keep going. Right there, right there. So it
Right,
looks
sorry.
like that we have 3 members that will be, the term will be ending at the end of this year, and we would love to have you continue, but I think it has to have to go back to their districts.
I
to
would
be-
just remind everybody that just following the letter of the process is that the district would make a recommendation or a nomination. And then the recommendation is made to the ESS committee, and specifically the chair of the ESS committee, which currently is Lisa Kent. And that is how those appointments are made. For the ESS committee itself, the nominations from the district go to the executive board of the Recorders Association, and they make the appointments. So I think all we're doing here is a gentle reminder. Terms are expiring. Think about it. Talk to your district presidents. Talk amongst yourselves. But this is the way the nomination process works. So we're informing you of that. It is that time of year to go through that process. So um, don't interpret anything to say we want you to go. Okay, it doesn't mean that at all. This is just the process. So wanted to remind you of that. And then Samantha, if you could advance forward to the next one, we put together a tentative calendar following the pattern that we have this year, sticking with Thursdays, starting at 9 a.m. And you don't have to make a decision on it now. We'll put it on the agenda for the December meeting. But we'll ask you in December, can you lock in dates for the 2025 calendar? So this is just a draft, and we would appreciate it if you are aware of conflicts or issues that we need to avoid. Please let us know. Again, this is just a draft. Going back up to the agenda item relating to the modernization update. We are anticipating that the ESS committee is going to be looking at a kind of a final package. And currently we're planning for the meeting next week, at least part of it to be a joint meeting of the ESS committee and the ICRA executive board. There are a few things that are still in flux, but that's the current plan. So stay tuned. We'll have more information. Obviously, Stacy and Megan are very much a part of that discussion. But I want to just give you a quick update. And mostly, I want to say thank you for, I know a budget meeting always takes longer than a normal meeting. There's a lot to cover. Appreciate the support that I've received from Lisa and Samantha in helping gather some of the information together so we can get to this point. So thank you very much. We really appreciate your time. I don't have anything further, Stacy.
I have one more just a quick question. The proposed 2025 meeting schedule, does this allow ILR staff to get the stuff you need to make that happen, you know, is it, you know, time
Yeah.
crunch ways?
Yeah, I think so. Um, um, Samantha does a good job, a really great job of putting a preliminary package together. And the reconciliations are getting done sooner than they used to get done.
Great.
So I think between us getting a preliminary packet out to you timely, that gives us time to put the finishing touches on it. It always takes more time to pull the budget together, but here we are, November 7th. We pulled the budget together, so I'm confident we can do this calendar.
Great. Any other comments or questions for the good of the team? If not, we can adjourn. Have a good rest of your day, guys.
Thank you, everybody. Have a
everybody.
great weekend.
Thank you,
you.
everyone.